let's get in Gautam Shah, founder of Goldilocks Global Research. And the reason why it's such an interesting time to talk to Gautam, almost any time is, but right now it's so critical because we are finally, Gautam, seeing the AI trade pull back. Now, it's not. I'm not saying that I want this to happen, but because it is happening, are there repercussions for what could happen to other asset classes, other markets, what have you?
Good morning, Neeraj. As a global citizen, I don't want the AI trade to pull back or even end. But as an Indian marketman, I definitely want that to play out because that helps India in some sense. In some sense, people believe that we are an anti-AI trade. And I think that's played out in the last 1 month because we have some of the Asian markets correct very big. The Korean market is down about 30% from the recent highs. The NASDAQ index has been consolidating and correcting for the last 6 weeks. A lot of the AI-based stocks around the world have corrected. And I think Indian markets have handled chaos and volatility and weakness quite well in these last 3 weeks. You had this global volatility, geopolitical issues again resurfacing, and you also had oil moving from levels of 68 to about 94 on the NYMEX. Despite all of this, I think to be at 24,000 today itself, I think is a win for the bulls. Everybody is obsessed with the market moving higher because that validates an uptrend. But honestly, sometimes not going down itself is a great win for the bulls, which is what I feel with what has happened in the last 1 month. So I remain optimistic. I think we had the perfect storm scenario in the last 3 weeks and the market respected support levels. I think this 23,600, 23,800 area is extremely important. We are still in a band. We have been in a band for the last 3 months and we have behaved like a pendulum. 23,600 on the downside, 24,600 on the upside. We will probably oscillate in this band, but at some point of time in the near future, I still feel that the chances of a breakout on the upside is high. But you can't be very encouraged when you have an SDFC bank at near a multi-year low, when you have Reliance at a 1-year low, and when you have technology seeing such a big fall. So while I'm optimistic on the market, I still feel that the real opportunity is outside of the top 100.
Okay, Gautam, very good morning to you. And this is something that you have said in the past as well. Our opportunities outside top 100. Problem is that that's such a vast sea. Right? And that's where then you need to be a little more pinpointed, have a better filter to apply when looking for ideas. What have you been seeing and where are you seeing that opportunity coming in?
See, Tamanna, we honestly recommended a lot of clients for basket buying in late March, early April, because we felt that it had come to a point where if you just bought a basket of mid caps and small caps and micro caps, you did well for yourself. And from those levels, we're already up 25% in a matter of 2.5 months. So I still feel that this entire broader market basket will do well. However, if you have to pick sectors, I mean, look at what the Adani Group has done in the last couple of months, and I think it will go on to do bigger things. The real estate comeback in the last 2-3 weeks, I think, is phenomenal, and I think they will go on to appreciate another 15%. I think the entire pharma space has done so well in the last 1 month, and I think they will continue to do well. And we've also seen a big comeback in chemicals. So that's another space that we like. And the entire hospitality sector, travel and tourism, is another space that we like. So I think these are pockets that have done well. Yes, on an overall basis, most stocks have actually gone down then gone up. But I think if you are in the right pockets, the market is rewarding. Also, if you look at the technology index, I spoke about it in our last interaction that the worst could probably be over. We are up 17% on the technology index in the last 3.5 weeks. And I think there is more to come towards 32,000 and 35,000 on that index.
Okay. Wow. Wow. Okay. And Gautam, could it be a broad-based participation? Because erstwhile people were making this distinction that maybe the top 5 don't, but the mid-sized 5, mid-sized 4, mid-sized 3 IT companies will do well. If you indeed are so bullish on IT or reasonably bullish on IT, let's put it that way, will it be the tide carrying all boats or will some do better than others?
Well, when the tide turns, it definitely carries all boats. It's just that some boats are a little faster. And I think mid-cap IT will do far better than large-cap IT. We've seen that in the last 10 to 12 days, and we are likely to see further upside. And I'm tempted to believe that mid-cap IT in India is a slightly better proxy of the global AI trade in some sense. So that's a space that we definitely like on an overall basis. But the good news is that if the we have seen light at the end of the tunnel for the technology space, it's good for the overall health for the market, because this index had lost about 40%. It tested the level of 26,000, which was a 5-year low. And from there, we are today at levels close to 30,000 or beyond. So I think overall as a basket, it will do well. But again, if you're looking at alpha generation and outperformance, I don't think it will come from technology, because it will keep having those headwinds from time to time. On an overall basis also, I think the Indian markets in some sense have lost its mojo. So don't expect anything special out of the index, but there will be pockets that will do well.
I'm going to go back to you on that, Gautam. Indian markets have lost its mojo. Any chances of finding it? We get relieved when we see a 24,200 now on the index after everything that we've been through. But are we looking at that range-bound kind of space at least for the next 6 to 8 months?
I'm actually very happy if the Nifty stays range bound. Over the last couple of decades, the Nifty has always been the barometer for the Indian markets. So if the Nifty moved higher, people celebrated, and if it didn't do well, people complained. But actually, Nifty, I don't think is a barometer to what's happening right now, because the kind of bull market that micro caps and small caps have seen, I think that's the barometer for the Indian markets, and that's where the real trend and the momentum is. So when we talk about the Nifty and the top 100, again, I'm not excited. Even if we break out above 24,600, which I think will eventually happen, and we will move towards 25,500 and maybe even towards 26,000. But anything beyond that in the current scheme of things and with the current evidence on the table looks very unlikely. So I don't want to be very lofty about the Nifty targets from here.
What about targets for other kind of investment ideas? What are you looking at when you're seeing gold prices, when you're seeing crude prices? Because I know you would be looking at this entire basket from a technical perspective as well. Crude is the tricky one, I admit, because it's all over the place.
See, firstly, I think globally we are in an equity bull market. And I think that's really helping India, because it's not allowing it to break down. I think last week we had an environment where we were at a multi-week low and we were languishing at 23,600, and there was this fear, will we break down? But the technology and the financial services sector helped the market come back. Just yesterday, we released our US big picture report. And if you see the kind of trends that is there in Europe, you are seeing multiple breakouts in multiple markets in Europe. And even if you look at the US market indices, I think they will all go on to make new lifetime highs. I think NASDAQ will make a comeback, will make new lifetime highs. So US, Europe is in great shape. Asian markets, selectively, they have corrected, also because they had seen a very large move in the last 1 year. They will also come back. So in a global equity environment, I think India will eventually participate. So the trade is still very much in equities. You just have to be selective. Gold and silver for the last 3 weeks are at long-term supports. I think the area around 55 for silver, 3,900 for gold are very important supports. And I'm firmly of the view that we will see a turnaround from here. So if you have to do some sort of a capital allocation, gold and silver, I think, is it, because these are excellent prices.
Okay. Gautam, I'm just going back to the comment that you made that Indian markets has lost its mojo. By that, I presume you mean the Nifty 50 has certainly lost its mojo, but bottom-up stock picking will stay alive and kicking. Would that be a fair assessment?
That's a fair assessment, Neeraj. And I think over the last decade, we've seen segment rotation multiple times. There are times when the Nifty is not ready to break out for its own headwinds. And look at the situation that we've dealt with. USD INR at 97, oil was at 94, AI disruption, FI selling continues, disconnect between valuations of India versus the rest of the world, government policy. You just have too much on the plate to expect Indian markets to break out. And in this environment, to be at 24,000, as I said, is a big win in itself. So I'm very happy as a stock picker if the market stays range bound and stocks do well.
Now, Gautam, if you look at those longer term charts as well with a lot of aplomb, where is it that from what is this, July? So let's say from August this year to whatever time frame you extend it to, which is long term in the current scenario of the world, where is it that you find the most favor as a theme?
Well, I still feel as a theme, micro caps and small caps is a big theme. And I think despite having rallied 25%.
Sorry, Gautam. I'm just interjecting here only because that's like what, after 250, right? So let's say after 500, that's like 4,500 stocks. Our viewers will not be able to decipher it at all. Maybe try and narrow it down a bit as well as you finish your point.
Yeah, so firstly, I think for an average investor, I think it makes sense to even buy a basket. There are a lot of ETFs in the market that give you direct exposure to small caps. So you don't have to be really smart to go out there and do stock picking. That's my key point. If you just bought the small cap ETF, a few months back, you would do really well for yourself. So that's my key point, that just buy the index, buy the ETF, and I think you'll do well over the next 1 year. Within the overall market basket, I think real estate for me is a star performer. Pharma for me is a star performer. Technology, I think, will see further upside, maybe another 12 to 13% upside. I think PSUs will make a big comeback. I think power and energy is still a big opportunity. And I know there's been some correction in the recent past, but I think it will do well. And Adani Group remains a favorite, which I think will do bigger things. So it's not an easy market for a stock picker. You have to really work hard for returns. And that's what makes us uncomfortable, because returns have come to us literally in the last decade, not anymore.
Gautam, are you enthused by anything you're seeing in the consumption space? I mean, I'm not asking a specific view on HUL unless you have one, but that is one space where no one is quite clear where things are going. You have underlying data which seems like demand is not as bad as was earlier expected, but then an El Nino on the horizon, then crude prices add to all of the confusion. Are you forming any view there?
Well, a month back, we made the view that technology could have bottomed and the worst could be over. I'm starting to feel that consumption could have also bottomed, because, in the last 18 months, we've had a very difficult period for the FMCG index. In fact, for the last couple of years, this index has underperformed. And now they seem to be turning around. And we are seeing the comeback, a lot of consumption stocks. If you feel Eternal is a consumption play, which I believe, if you feel some of the airline stocks and hotel stocks are a consumption play, which I believe, then I think they're all coming back really well. Now, consumption is a proxy to the Indian economy, and if it does come back, we can say that the markets can get back on track. But my bigger problem is not many people are giving importance, I'm talking from an FI perspective, to Indian markets in the global framework. So on a standalone basis, we will do well, but in global terms, in dollar terms, I think we will still be an underperformer.
Okay. Thank you so much, Gautam, for speaking with us. We always end these conversations with a Nifty year-end target. I don't know if you want to give one right now, since you've said time and again you're not too excited about the Nifty, but any year-end, calendar year-end targets that you have in mind?
Well, gone are the days where you could you fancy yourself with round numbers. I don't think I would want to do that. But the best is we can probably go back to the previous highs of 26,500. That's the best as I see right now.
Best case scenario. All right. Thank you once again, Gautam. Always a pleasure to have you on with us on the show.